Good day, ladies and gentlemen. I want to wish you a Merry Christmas in advance. Today is the 24th day of December 2024. Okay, very soon we'll be heading into 2025. It's my prayer that we all cross over to the new year. Okay, so today I'm going to be teaching you something very, very special, something very important that is going to add to your forex knowledge. Okay, excuse me. So it has to do with what I call internal range liquidity and external range liquidity. These are what moves price. Okay, once you can master it, you're good to go. You have an idea of where price is going to, and that is going to help you, become a better trader. All right. So when you're trading and you have an idea of where price is going to, definitely that's an important information that will definitely help you. Okay. So you already know that if you have an uptrend, price puts in higher highs and higher lows like this. But there's a reason behind it. What's it called? External liquidity is always your highs and your lows. That's external liquidity. Your highs and your lows are your external liquidity. Okay. While the internal liquidity are your FVG. Pay attention. This is very important. FVG and your OB, your order block. Okay. So price will always move from internal liquidity to external liquidity, then back to internal liquidity, then back to external liquidity. So it's like a cycle. It keeps going in that cycle. The only time it's going to break the cycle is when price wants to change from one particular kind of trend to another kind of trend. Okay. So let me give you this illustration. Okay. So this is an eye right here. This is another eye right here. Okay. So when price gets to this eye, it creates liquidity at this eye. Okay. There will be liquidity at this eye. Okay. So from this eye, it's going to come in to take what we call internal liquidity. So when it's coming in, it's either going to come into a fair value gap or an order block. So when it's coming into that fair value gap, that's what we call price moving to internal liquidity. So if price has moved to internal liquidity, where is the next place it's going to move to? It's going to move to external liquidity, which, like I taught you, is high or low. Okay. So this eye right here now is the next objective for price to go and clear. That's the reason why your uptrend moves that way. Okay. So it moves to break this eye, clearing the liquidity just above that eye. Okay. So once it has taken external liquidity, what do you think it's going to do next? It's going to come into internal liquidity. So from there, definitely there will be, fair value gaps around here that it's going to come back to. That's price moving into internal liquidity. Once it has tapped into internal liquidity, the next place it's going to is external liquidity. So the cycle continues like that. Okay. Remember, internal liquidity is order block and fair value gaps. External liquidity are your highs and lows. Very simple. So basically, let me give you some examples on the charts so you can understand what I'm trying to say. Okay. So now price is giving us a downtrend. Okay. This is a downtrending market, right? Now it puts in this low right here. This is a low right here. Okay. So definitely there will be liquidity below this low. All right. So as it has put in this low is going to serve as external liquidity. Okay. So price breaks the low, taking out the external liquidity. The next thing price would want to do is to move into internal liquidity. So now that this low is broken, you can see price moving back with this bullish candle. Okay. Move back with this bullish candle, trying to get to this order block. Okay. Tapping into internal liquidity. That way there's also a low created here. So price will come down and break that low. All right. So the breaking of the low, signifies a move to take external liquidity. So now that it has taken external liquidity, the next move will be to take internal liquidity, which is price retracing back to this order block right here with these bullish candles. So price came back, coming into this order block that is right here before pushing in the downward direction to break this low. Okay. So movements into internal liquidity, then it comes to take the low, which is external liquidity movement. Okay. What else do we have there? So this is the last part I stopped at. Okay, so price came down, taking the external liquidity below this low. So the next thing price would want to do will be to move to internal liquidity, which is this order block right here. So price moves up into the other block and then pushes down, taking external liquidity. So now that price has taken external liquidity, the next objective is to take internal liquidity. So it retraces back into this other block, which is internal liquidity movements. Okay, it moves to take internal liquidity, which is going to be an order block or a fair value gap. All right, so it takes its next objective. It has to come and take external liquidity resting below this low. So it pushes downwards, taking that liquidity right here. Now that it has fulfilled the objective of clearing the liquidity below this low with this big bearish candle, its next objective is to come into internal liquidity. So the cycle continues. So you can see price pushing up, trying to get to this other block to take the internal liquidity. Now that it has done that, excuse me. Now that it has done that, the next thing it would want to do is to take the liquidity resting below this low. You can go and check your chart. This is exactly what price is doing. Okay, so how can you take advantage? When price is moving in this direction, you already know. You just look to the left, try to see what price is going to. Is there an order block there? Is there a fair value gap there? So once it gets there, you can now take advantage of it. As you can see, reaction from that level, as if price wants to react and move from that level, you can take advantage to enter a trade. You already know where to take profit, because price is definitely going to try to clear this low if it wants to move from there. Okay, so the low gets cleared, which is a move to external liquidity. Now the next place price wants to go to will be internal liquidity. You can see that fair value gap was even formed right here. Fair value gap was formed right here. Okay, so price keep moving down, so we are still awaiting the move to internal liquidity. You have a fair value gap, we have another block. So let's see. So price retraced into the fair value gap this time around. Okay, so you can see this upward movement coming to fill this fair value gap. Okay, coming to tap into this fair value gap, which is internal liquidity movements. Then this low will definitely have liquidity, which is external liquidity. So that's the next thing price would want to do. Since it's moved into internal liquidity, next movement will be to clear the external liquidity. So the cycle just continues.